Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, April 27th, 2022. Again, as I keep saying, the markets do remain interesting. I am finding it extremely interesting how we are progressing through this particular week, where we have some of the largest tech companies reporting their earnings. And it's kind of been a mixed bag, but we have seen how individual stocks can rally and rally very nicely and still remain within a larger bearish count. And because as I have been talking last week, I talked about it and I thought it's kind of a conundrum for me at the moment, how if we get more than one just blasting off the doors, what that might do to our picture, to the how outlook for the next several months. And thus far, it's not really making any changes. So again, starting on the daily, I have no changes to make. So we still are in a significant third wave, intermediate degree third wave down. And as I have discussed, I expect and anticipate that within this third wave down, there will be more than one subdivision. So in other words, it extends. The third wave extends beyond our original. We want to see, excuse me, 5 waves of minor degree. That's what sits inside an intermediate degree impulse. 5 waves of minor degree. Where these extensions come in, where they take place, are within the third wave of that third wave. And then again, in the third wave of the third wave of the third wave, and then again in the third wave of the third wave of the third wave of the third wave. So this is how all of this in earnings reports are being filtered into this count. And trust me, it's not me, it's the market. And this is what the market is saying. And again, and I'm just going to switch down to the hourly as I continue to talk. I have no reason to actually revert and go over to a bullish picture for the near term, the midterm, or the long term of the NASDAQ and the S&P for the markets. I don't see it. I still see nothing concrete to tell me to do so. And what I mean by that is that, remember, my pecking order, interest rates sit at the top. And right now, there's still a lot of pressure on interest rates to go up. Right now, the pressure remains that inflation continues to run rampant. So without any change there, how do I expect the top of the food chain to change? Because it's now on the hunt, right? It is looking for price. It is snatching up yield. So I don't see that ending. I don't see a resolution in place that calms everything on a military level. That's not in. I see some things in place, but do we see an end to the current pandemic? Well, sort of, but not completely. So we're still dealing with a lot of things that have not been resolved, yet people want to jump back on because I got to have something positive to hang on to. And it's like, well, I'll show you how a positive thing is that the market goes down and you get to make money. Not just let the big banks make the money, you get to make the money. And so there's a lot of trading, folks. There's a lot of trading and people want to trade. I continue to say that. I'm going to continue. That means both sides. That means up and down. We don't have to wait for it to go up to buy it. We don't have to wait for it to sink down before we'll sell it. So, and you don't have to be long to sell. So there's a lot of trading going on and a lot of the day trading and a lot of the option trading. It's just there. A lot of money is changing hands. So these earnings reports are basically Pavlov's response, I'm going to call it, because, they beat the street in Facebook. They beat the street. Okay. By how much? I think by the way I saw it, I think it was like 6 cents. I guess 6 cents times however many billions, I don't know. But still, 6 cents. They beat the street. Run the future up over $30. Okay, whatever you guys decide you want to do, that's a pretty big move. But a lot of it, I'm sure, was on the forward guidance. A lot of it was, it's like, okay, let's go listen to what the company has to say moving forward. So again, I've always been a little bit on the confused side. I have to react to it. Don't get me wrong. But I've always found it a bit interesting. It's like, why are investors so gangbusters to buy or sell history on the basis of what somebody who works inside the company tells you their future is going to look like? And I'm like, well, your models are going on what's happening right now. Your models, do they also take into consideration much higher interest rates? Or do you also factor in, gee, yields have got to be topping and bond prices are bottoming? And is that your model? So again, there's so many unanswered questions, folks. So it really only leaves us one choice. And that choice is we step in every day and we trade. And I want this volatility to remain. It is exquisite for option traders, and it's exquisite as it translates into the future in the form of velocity, how fast the moves are happening. I mean, yeah, they can be very frustrating, but I'm telling you, when we trend and the trend is down, it is nice. It is very nice. And I'm not going to feel anything other than go. I have to tell you, whether it's an upside move or a downside move, when it's impulsing, so when the trend is up and we're going up in 5 waves, it is glorious. It's fabulous because you can make large sums. You can make a fair penny. I don't need the market to go down to make the fair penny. I just need it to move. I need it to trend. Well, right now the trend is down. So stay technical. When the trend's up, I'll be rooting for it as much as the next. And we'll make money. But stop thinking selling is negative. It's not. It's money making. And that's the name of the game. So everything on the outside, which is going to have a control in terms of interest rates, has not changed. All of this emotion that goes into the market now does change. And we measure it in terms of an Elliott wave. And that wave continues to point to the downside. We had it again today, folks. Moving into the close, you saw those funds come in and they're selling again. They sold it again, back down to, tell you, they got it down to 41.72. And the low yesterday afternoon or yesterday evening, 41.37. So we got down to, what did I say? Give me that one, please. 42, did I say? Come on. Is this something? All right. That's the one I want. Thank you. 57. So it was very well headed in that direction. And then they tried it again at 72. And then it kind of rallied. That was after. So, but by the close, they had gotten a push back below 4,200. So that was on the way. And those were just the sellers. Those were funds. And then we had Facebook earnings. So what does that portend for us for tomorrow? Let me just move this back open. I think that we can't really, and again, the Elliott count is another extension. So minor 1, minor 2, minute 1, minute 2, sub-minute 1. And I'm going to leave it this way. But what it does tell us is that we got a lot of 3s, and well, we got one big 3, and then we're going to have a 4 and a 5, and another drop, and a 4 and a 5, and then another drop. So what I'm talking is that we continue, we'll go down. So this is 1, this is maybe 2. We get that 3rd, then we get a 4 and a 5. That's of the minute 3rd. And then we get another 4 and another 5, and that's of the minor 3rd, and another 4 and another 5. That 5's down of the intermediate. So we're going to be running into those steps when we get back down. So again, I cannot tell you that this will not subdivide yet again, or we're just going to work our way down and it's going to be 1, 2, 3, 4, 5, and it's all going to be my sub-minute, a sub-minute. These are sub-sub. I don't know. But again, I don't find any reason to change the downward trajectory of the markets. In other words, if the market were going to continue to move lower versus higher. Higher moves are corrective, lower moves are trend. That's the way I'm looking at the market right now. So this wave two, we have to continue to allow for a continued upside. And let me see if I can get these in. We'll just put it there. I'm sure I'm going to be close. And you can see we actually, come on, thank you, come on. Isn't it something? My apologies. These are all new computers, and this is like still does it, and they're new mice. So there. That we need to leave additional room for the move up. And so what we have is we have the possibility that it may be, but I think that we still need a completing C wave up to complete this wave two. What we have that has held thus far, again, also here in the S&P as it has in the NASDAQ thus far, is the 50. The 50 moving average on the hourly chart sits at 42.25. And it's gone up, it broke it, came back down, tested it, fell back down, fell back down, fell back down. Now, if it's going to continue higher, if we're still looking that we need to break, that's the level. First of all, we need to break 43.36, and then we can, that'll clear the way for it to get to like 42.42. But we got to break above that. So break above 42.25 with a little bit of an oomph. So it's got to get through and not come sliding back, but get through. That clears us for 42.42. We have additional resistance at 42.57. And we need to be able to count the 5 to put in the C. What it cannot do, it cannot break 43.03. Because that's where that one is, 43.03. So this actually would be a little bit different because we're okay on the bottom, but I need to make that adjustment on the top, and that would be 43.03 and not 7. 43.03. Bottom side looks pretty good. All right, so it makes a slight change, still at 42.25, but the resistance above is 42.39. So a break there clears it for 42.39. And that could hold too because it takes us to a new high, but I'd be looking that it might get to 42.53. 42.73 would be next resistance after that. What it cannot do, it can't break 43.03 because that invalidates that this was a first, wave one. There is another count that goes with that if it should. And that would suggest that this minute one actually gets recounted. And this is 3, 4, and that's 5. And that gets put over there as minute wave 1. And this is minute wave 2. So again, the whole thing could be extending down. But in terms of just making this a lot larger still. Okay, so tomorrow, leave upside potential in place. Well, if we start to break down, we will again break through some support lines that we see, but also break through the the Fibonacci on the way down, but I want to talk about something else right in there. The break through the small, moving averages that we have here. And then we have 41.99, 41.75, 41.35. That's the low. And then we start to break. 4,100 does still remain a little bit of the headache. We got to get below that. That's still going to remain to be a very more serious support zone. All right, I'm going to leave it right there. Our next update will be on Thursday, the 28th. And by the way, don't forget Amazon and Apple report tomorrow. Have a great evening. Next update tomorrow.